Good morning, everyone. Welcome to the official YouTube channel of Officers Adda 24/7. So, how are you all? So, let's start this session. And as you know, we have started 50 days, 50 questions or 50 days, 50 classes series for your JAIIB, PPB, and Indian Economy, Indian Financial System as well on the same channel, Officers Adda 24/7. So, Monday to Friday, we are meeting for Indian Economy, Indian Financial System at 7:30 a.m. to discuss 50 days, 50 classes, and at 7 a.m. for same topics for same 50 days 50 classes for the PPB principles and practices of banking. And on Saturday you will find the weekly revision session. On Sunday you will find the special sessions like 50 questions in 50 minutes. So these kind of series will be there. Monday to Saturday you are full pack on the YouTube where you have to attend these sessions. So do remember the timing, 7 a.m. and 7:30 a.m. for PPB and IFS respectively. Now let's start the session. I'm your mentor Amanjot Kaur for Indian Economy, Indian Financial System and PPB. And in this particular session, what topic we are going to cover? First of all, as you all know, we have 45 units in Indian Economy, Indian Financial System. Out of that, 11 units were there in the module A. Now till 19 we have in the module B. So the module B, unit 12, 13, 14, 15 have been discussed already. Now today we are going to discuss the business cycle, that is unit 16. It's a very small unit. It's a very lovely unit. You will find it very simple or easy to understand. But one thing I want to add here, and that thing is this: in the module B, or even in module A, in comparison, if we talk about combined module A and B, you will find here that the 15th unit, that is theory of interest, that's the kind of chapter that can give you a fear, that can give you a headache, because it's a little bit tough chapter, because it's have a lot of graphs and theories, classical theory, Keynes theory. This is what you have to cover here. So that's why I'm saying this chapter is a little bit we have to worry about. But do not worry about it. First of all, do focus on the conceptual understanding. It will be easy, but yes, focus on this chapter. This is important. Plus, this is a kind of troublesome question. Okay. Now, let's discuss about the business cycle first. So, what is business cycle? Business cycle is simply refers to economy-wide fluctuations. When you are finding fluctuations, economy-wide fluctuations, in what? In production as well as in economic activities. So in production and economic activities, if you find fluctuations, that is known as your business cycle over a several months or years. Duration is not fixed. It's not like in 6 months you will face these phases, or in 1 year. It can be several months or years. But yes, whenever you face the fluctuations between production, in the production and economic activities, that is known as your business cycle. Okay, so business cycle simply means the whole course of business activity passes through some phases of prosperity and depression. So first of all, no business cycle will be completed until and unless, right? No business cycle will be completed until and unless you have what? You have one expansion and one contraction. So one prosperity and one depression is required, is mandatory to have in the business cycle. Then only your business cycle will end. So the prosperity, depression will be seen in the business cycle. Now the business cycle have 4 phases. How many phases are there? There are 4 phases that will cover your whole business cycle. That we have boom, then recession, then we have depression, and the last one is recovery. So these are the mainly 4 phases of your business cycle that you will find in your any business cycle. Okay. Acha, one more important thing, business cycle can also be known as what? It can also be denoted as an economic cycle. Okay, you can call it a trade cycle. So trade cycle, economic cycle, or a business cycle, all these 3 terms are similar. Okay, you can call it economic cycle, trade cycle, or business cycle, all are same. Now, Next, if I talk about here, the business cycle have 4 phases that we have discussed. Now, how this business cycle looks like? First of all, there will be a graph like a product life cycle, in which one S-shaped curve will be seen to you. Now, this situation is the expansion where the economy, your business is expanding. Your economic activities are expanding. Okay. Then this is a peak, or we can call it a boom period. Peak or boom period, you can call it a. That's a peak or boom period. Now, this is the contraction period from here to here. And from here to here, that's a contraction. Economy is declining. So here recession and here depression can be seen. At the peak level of the negative of your economic growth, that will be a trough. And after this, you will find the recovery session. After this, you will find a recovery session. So this cycle will go on. This is the recurring phase of the cycle. This recovery, boom, depression, recession, all these will be recurring, because this cycle will not be going to end ever. So that's why all the phases of the business cycle, they are recurring in nature. They are what? They are recurring in nature. Clear? So this is what we're talking about, your business cycle. So we have discussed the certain conceptual understanding of the business cycle here. Now let's move to the questions. And before moving to the question, I'm telling you again, be active in the session. Do answer the question. If you're watching a recording session, then let me know in the comment section. Drop a message how many answers you have given correct. And also do not forget to share the session. Okay. Now, first question is asking which of the following statement is not the correct regarding business cycle. So which statement is not right statement regarding the business cycle? So options we have here. These are 4 options. First, various phases in business cycle are repeated. Okay. There cannot be definite boom and depression period. Business cycle are pervasive in their nature. Pervasive means big. They have a lot bigger effect. You know? Now, the upward movement is more sudden and violent than the downward movement. Okay, than the downward movement. So what do you think? Which of the following is not a correct statement regarding the business cycle? So the right answer for all of you will be D option, because it has the various phases and they will be repeated, and that's true. Your boom, your recovery, your recession, your depression, then recovery again. This is going on. So this is true. Definite boom and depression cannot be seen in the business cycle. That is also true. Pervasive means it have a bigger impact. It have a bigger effect. It is also true. But the upward movement is more violent or sudden? No. The downward movement is more violent and sudden because it creates a lot of issues, negative growth for the country. Okay, so the right answer will be your D option. D is correct. Correct. Next. A wave of prosperity or depression in one industry in the case of a business cycle will generate a wave in other industries soon. So which of the following features of the business cycle it represents? So what you have to answer here, you have to answer that we are asking in the business cycle, you will say that there is a wave of prosperity or depression. Anna, there's a wave in the one sector. Let's say one sector is facing a boom. So it will going to impact the same on the other sector also, or not the sector, but the industry. Let's say, for example, in the business, in the banking sector, we talk about systemic risk. So what is systemic risk? Like if one industry is facing loss, then the other industries will also face the loss. It means because of the one industry, there can be a loss in the overall industry. Let's say if State Bank of India fails in the future, or if such kind of condition can be seen, it means it is going to impact the whole banking industry. It is going to fall the whole banking industry if the State Bank of India falls. So this is what the systemic risk is. Same situation we are talking about here. So if you face, there is a prosperity wave, other industries will face the same. If there is a depression phase, other industries will face the same. So which characteristics of the business cycle define this statement? First, a business cycle is a wave-like movement. A business cycle is synchronic. A cyclical fluctuations are recurring in nature, and any of these. So this is true that cyclical fluctuations are recurring. They are going to keep coming in the future. It is synchronic. That is also true. It is a wave-like movement. That is also true. But regarding to this point, regarding to this statement, which of the following characteristics is true? That the B1. Synchronic means if one industry facing the prosperity, the another will also face. If one industry facing peak, that another will also face. So that's why the right answer will be B. It is synchronic. Okay, it is doing synchronic activities. Now, which one of the following is not the characteristics of business cycle? Which one of the following is not the characteristics of business cycle? Let me know. So first, we have these 4 options. They are recurrent, they are not regular intervals, they are not at regular intervals, they are uniform causes, all of the above. So which of the following is not a characteristic? Not a characteristic you have to answer. So if I talk about the first one, if I am talking about the first one, you will find here that is true. They are recurrent. They are not at the regular. You can't say that there is a boom in the economy for 4 years. Confirm 4 years will be there. Confirm 2 months will be there. Confirm 15 months will be there. You can't decide the interval. All this business cycle goes on as per the market forces, the demand and supply. So you can't give a particular interval to such a situation. So right answer, it cannot be the right. So it cannot be BC also. The right answer will be they are uniform causes. This is not correct. This is not the characteristics of a business cycle. They are not uniform causes. It can be any. Okay, so the right answer will be your C option. Next. Underemployment of both men and material is a characteristic of which phase? So there are 4 options in front of you where the phases of business cycle is available in front of you. Okay. Now, out of which phase, out of these 4, which phase is there where the underemployment is there? What is underemployment? This is now more important to understand. Underemployment is a situation where the person have to settle at the less what they actually deserve. Let's say, for example, I am deserving a better job, what I am doing right now, but I have to do this job. Reason, because I don't have any other option. So when what you are capable of, you are settling down less than that, that is known as underemployment. Okay, and this situation happens when there is a depression in the economy. If there is a depression in the economy, you will find here that it's very obvious. Depression, because in the depression the economy is starting from the 0 level. Economy is growing from the 0 level. If the economy is growing from the 0 level, now what happens? It's very obvious. The persons will find a job that is lowest according to their skills, that is lowest according what they deserve to. Like if I talk about COVID-19, after COVID-19 we have seen this situation, like the persons who used to be at the better position before COVID, they have to settle for less, because after the COVID, economies was in the loss, businesses were in the loss, so they were cutting out the people. So people have to settle for the less what they deserve for, and this situation maximized will be seen in the case of depression. Okay, so right answer is A. Next question we have, the turning points of business cycle are. The turning point of business cycle are. So the cycle, business cycle I have shown you. I will write it again here. So this is the business cycle. Okay. This is the business cycle. Now, which situation will come where? Let me tell you first. First situation, this period will be known as expansion. This is what? This is expansion. Expansion where your economic activities are expanding, है ना? And this is a peak situation. You can call it a peak or you can call it a boom situation. So peak and boom both are same, right? After that, from here to here, you will find a declining contraction in the economy. Here the expansion happening, here the contraction is happening. So here you will find the recession, and here you find the depression. Okay, this situation will be seen because economy is continuously doing what? Continuously declining. This is the situation where you will find trough. Trough means simply what we can call it, the point that where your all economic indicators are at the minimum level. When all the economic indicators of yours are at the minimum level, that is known as trough situation. And after this, you will find here recovery. This is how your business cycle is. This is how your business cycle is. So which of the following will be right in this situation? The right answer will be, you can easily find that there are 2 places that have a what? Turning point. So these 2 points are the turning points. Here the economy immediately going to the declining. Here the economy is recovering. So the right answer will be your peak and trough. The right answer is peak and trough. Okay. Now next. So D will be the right answer. Next question. Involuntary unemployment is almost 0 in the dash phase of business cycle. Now the involuntary unemployment will be 0 in which kind of situation, that we have to find out here. Let's say So these are the options we have: expansion, contraction, trough, and depression. Expansion, contraction, trough, and depression. These are the four situations in front of you. Out of these phases, where the involuntary unemployment will be maximum, will be zero. There will be no or a very minimum involuntary unemployment. So first, let's understand what is unemployment. Unemployment simply means when the person is skilled, physically and mentally fit, want to work, looking for a job but not finding a one. So I am skilled, I am physically, I am mentally fit, I want to do a job and I am looking for a job but I am not finding it. That's the unemployment. That's the situation which is unemployment. Now this unemployment has been divided into two categories. The first one, we have voluntary unemployment. We have voluntary unemployment, and second one, we have involuntary unemployment. So the voluntary unemployment is a such kind of unemployment where the person is unemployed because of the reason which is specific to an individual. Specific to an individual. That is known as voluntary unemployment. Clear? So right answer is what? Right answer is your okay. B and D options we are seeing here. So let's see. Next, we have involuntary unemployment. Involuntary unemployment is the unemployment which can be seen because of the socio-economic reasons. Because of the socio-economic reasons, if you are finding out unemployment, that's an involuntary unemployment. It means, now what is socio-economic reason? Let's say, I am skilled, I am physically, mentally fit, I want to do a job, I am looking for a job, but I am not finding one. Reason because there is a recession in the economy, there is a depression in the economy, because there is a crisis in the economy. I want to do a job but there are no jobs available because of political instability, because of the crisis, because of the recession, because of the depression. Any reason can be there. That is socio and economic. That is known as involuntary. Any social reason, any economic reason is the reason why I am unemployed. That is known as involuntary unemployment. Now voluntary simply means specific to an individual person. Involuntary, socio-economic reason. Voluntary, specific to an individual. Clear? Now, in which phase you will find zero in involuntary? That is expansion phase. Because in expansion phase, economy is rising. Now, when economy is rising, why will you find the socio-economic reasons to not get unemployed? To not get employed. So the right answer is expansion. In expansion, you will find minimum or almost zero involuntary unemployment. Okay, right answer is A. Next question, business cycle results when? First, aggregate demand grows faster than potential GDP. The labor force participation rate changes. Aggregate supply, aggregate demand change at an uneven phase, and real GDP equals to the potential GDP. Now, what is real GDP and what is your nominal GDP? That I have discussed in my session already. Okay. Now, let me know which of the following is correct. The right answer is okay. See, labor force participation rate talks about the employment unemployment situation. This is not related to the business cycle. We are finding out fluctuations in the economic activity. So right answer cannot be B. Aggregate demand grows faster than potential GDP. No. Real GDP equals potential. No. But when the aggregate supply, aggregate demand changes at an uneven phase, that is known as your business cycles results. So right answer will be C. Okay. Now the term business cycle refers to which of the following? Business cycle we have discussed, that is also known as economic cycle. It is also known as a trade cycle. Now you have to answer which of the following term defines business cycle. First, fluctuations in the aggregate economic activity over the time. Second, ups and downs in the production of goods. Third, increasing unemployment. And the fourth one is declining savings. So what do you think, which of the following is correct? So it's very obvious, declining savings, increasing unemployment, ups and downs in the production. That will be a production life cycle, product life cycle. So right answer will be fluctuations in the aggregate economic activities over the time. That is your business cycle. Okay, so right answer will be your A. Next, following economy traits are the characteristic features of which of the following phase of the business cycle, or you can call it economic cycle. So there are certain traits, it means the characteristics have been given to you. So you can see these are the 3 characteristics given to you, and question is asking in which of the following phase you will find, these characteristics. The first characteristics is prolonged increase in demand, heating up of economy, demand supply lag. So is it in recession? Is it in depression? No, it can't be in recession and depression because economy is heating up. That's a growth situation. Either recovery or boom can be right. But you can see prolonged increase in the demand. Then demand supply lag is there. Economy is heating up. In the recovery, there will be no prolonged increase. There will be a little bit increase can be seen. So in the boom period, you will find all these traits, or you can call it a characteristics of the economy will be seen. So right answer will be D option. Right answer is your D option. Okay, now next. In dash phase of business cycle, underemployment will be widespread. In dash phase of business cycle, underemployment will be widespread. So in which particular phase you will find that underemployment is at its maximum. So I have told you underemployment means person have to settle down for such a phase or for such a post which he do not deserve. He deserves more, but he have to settle down for less. Which of the following you think is correct? Recession, depression, recovery, or boom? A, B, C, or D? So I have told you underemployment situation can be seen in what phase? In your depression, and that's where it will increase also. That's where it will increase also, because we know the person have to be settled down there, because there is no money in the market. After COVID-19, what happened? People know that there is no jobs available in the market. Business are cutting down. Companies are doing cutoffs. They are firing the people. So if you are getting a certain job, take that particular job, because you cannot know in the future what happens. So that is known as depression. Good morning, everyone. Welcome to the official YouTube channel of Officers Adda 24/7. So how are you all? Let me know. So let's start the session. Before starting the session, those candidates who have already joined here, do let me know is audio, video both are okay? Are we good to go? Also, let me know in the comment section, are you regularly joining these sessions or not? If you are new to the channel, I will let you know that this particular session is the 50 days, 50 classes session, in which every session we are discussing a particular topic of your IE, IFS. The same series is going on for the PPB as well. And the timing of these series is morning 7 a.m. for PPB. In morning 7:30 a.m. for Indian economy, Indian financial system, Monday to Friday. On Saturday, we have our, what we can say, weekly revision sessions. And on Sunday, we have our simple special sessions. Okay, so this is what the study plan of your YouTube regarding your JAIIB October 2023 paper. So let's start. In today's session, we are going to talk about the chapter number 18. If I talk about in Indian economy, Indian financial system, there are total 45 units in this particular subject. Out of 45, the 11 units were in the module A, and from 12 to 19 units are in the module B. So today we are going to cover the module B, unit number 18, and total till 19th unit we have a module B. So after having one more session tomorrow, we will be completing the module B and will move forward to the module C. So today what we are going to discuss? Today we are going to discuss the system of national accounts and GDP concept. So before starting the session, before coming up with the questions, let's understand about the topic a little bit. Then we will practice the questions. So if I talk about your national account, SNA and GDP concept, simply here we have to study the basic understanding of all the national income aggregates. Okay, and about the system of national account of IMF we have to cover. So first of all, if I talk about this chapter, the GDP concept is not the single concept that you have to study. When you are studying GDP, you have to understand more other things also. We have to cover the national income, the per capita income, the GDP, the GNP, the NDP, and NNP. So these are certain aggregates of national income that we are calling. And all these words have to, all these values have to be calculated on the market price as well as factor cost. Okay, we have to understand these values at the market price as well as at the factor cost. Now, what are these in detail for you? For that, you have to go to for the conceptual classes. But in the short, I will let you know. If I'm talking about a per capita income is simply the per person income of a country. That's the average of our national income. Now, what is national income? National income is the total income of a country that is earned within or outside the geographical boundary of a country during a financial year by the citizen of a country. So whatever income the citizen of our country is doing in a financial year, whether it is done in the boundary, it is done outside the boundary, that will be counted as a national income. What is GDP? GDP is simply the money value of all final goods and services that is produced within the geographical boundary of a country. Whether it is produced by Indian or foreigner doesn't matter, but it have to be produced within the geographical boundary. Now GNP, gross national product. GNP means when the production of all final goods and services money value will be counted, which is produced by the citizen of a country within or outside the geographical boundary of a country, that's a GNP. Okay. Next, what is NDP? NDP is the money value of all final goods and services produced within the geographical boundary of a country minus depreciation. And similarly, NNP means money value of all final goods and services produced by the citizen of a country in a financial year minus depreciation. So what we are doing here, whenever you find the term domestic product, whenever you find a product, domestic product, it means the production within the geographical boundary will be counted. The production within the geographical boundary will be counted under the domestic product. Whenever you see the name national product, it means the production by the citizen will be counted. Now, it doesn't matter citizen is living in the country or outside the country, but it should be, production should be counted by the citizen. Okay. Now, the gross value means the total value of a product. So, whenever a company sells product for the first time in the primary market, that value is the total value of a product. That's a gross value. And then we have a net value. Net means remained value. Remained value means what actually the product means right now. So it will be counted gross minus depreciation. Depreciation means decrease in the value of assets is depreciation. I purchased my phone in the year 2020. Now, right now, it's 2023. So, when I purchased my phone, I paid, let's say, for example, 1 lakh rupee in 2020. Now, in 2023, if I want to sell that particular phone, I will only get 40,000 rupees, let's say. So, the 1 lakh rupee of the product was the gross value. Okay. Now, the product will only have 40,000 value. That's the net value. And the 60,000 value was the depreciation. So net means the remained value of a product. Net means the gross matlab total value of a product. Net means remained value of a product. Okay, so this is how the GDP, GNP, NDP, NNP will be counted by only these 4 terminologies. If you remember these 4 terminologies, you will easily be able to understand what is GDP, what is GNP, what is NDP, what is NNP. Okay, so this is all. Now let's start. So it's very hard to cover the whole chapter in particular half-hour session. So that's why we are not covering whole chapter here. But yes, in the question, whatever concepts is required to be understood, I will be discussing that. And in the end of the session, I will be asking all of you how many answers you have given correct. So be active in the session and do let me know how many answers you have given correct. So the first question is asking about which of the following is the correct definition for GDP of a country? So question is asking which of the following is the correct definition of GDP of a country. So you can see it is a domestic product. It means production within the geographical boundary will be counted. Whatever production happened within the geographical boundary, that will be counted here. So the first option is saying the gross domestic product is the total monetary value of economic transaction within country in a given year. Okay. Second, the GDP is the total value of both monetary and non-monetary goods and services in a country within a given year. Third, the GDP is the total value of tradable goods produced in a country within a given year. Fourth, none of the above. So which of the following will be correct? Which of the following will be correct? So it's very simple. You are talking about the GDP, the production which happened within the geographical boundary of a country, that you have to calculate. And that will be calculated simply. The GDP is the total value of tradable goods, which is produced in a country within a year. Whether it is produced by Indian or foreigner, doesn't matter. But it have to be produced within the country, within the geographical boundary of a country. So that's why the right answer will be your, one second. Okay, it's only talking about tradable goods. No, it will cover services also. No. So right answer, it cannot be the right answer. It's talking about tradable products produced both monetary and non-monetary. No. It is talking about monetary of economic transaction within a country in a given year. No, not economic transaction, production. So the right answer will be your D option. The right answer will be D option. None of the statement defining the GDP. So the GDP full form will be money value of all final goods and services produced within the geographical boundary of a country during a financial year. It's not mandatory that have to be tradable. No. Tradable means you are able to do export, import and all. No, it's not mandatory. Whatever production you have done, whole value of that production will be counted in the geographical boundary. That's a GDP. So right answer will be D option. Okay, right answer will be D option. None of the above is the definition of the GDP. All are incorrect. Now, which of the following statement, carefully choose the right one in relation to the concept of GDP computation. When you calculate GDP, which of the following is true, that you have to answer. And these three statements are there. First, a country's GDP may be calculated in three ways: from a production standpoint, from a income generation, and the third, final utilization. These three forms are the circular in nature. Okay. Third is saying it starts with the production stage, when production units employ capital and labor to produce commodity and services, the sum of the which is called GDP. Okay. This production process creates a certain quantity of monetary income which allocated to capital labor by the producing units. So which of the following is clear about when you are doing the GDP computation? When you are calculating GDP, what do you think which of the following is correct? So it's very obvious every form is correct because GDP is calculated in the production method, income method, expenditure method. There are three forms that has been defined here: production, income and expenditure. First is correct. Second is also correct. It starts with the production. Na? You are doing production of all final goods and services within the geographical boundary of a country. That's a production. Third one, the production process creates a certain quantity of a monetary income. It creates what? It creates a certain quantity of monetary income that will be counted here. So the right answer will be your D option. Okay, next. Which of the following is true for the national income of a country? You have to answer which of the following is true in context to the national income of a country. First, if the savings exceeds the investment within a country, the national income will rise. If your savings is increasing, in comparison to investment, that will be counted as a national income. Like your national income will rise. If savings exceed the investment with the country, the national income will fall. If savings increases the investment, that will create the fall in the national income. If the savings exceeds investment within a country, there will be fluctuate, national income will fluctuate. And the fourth is saying if the savings exceeds investment within a country, the national income will remain constant. So first is saying savings increasing investment. Because of that, national income increase. Second is saying savings increasing investment. Because of that, national income falls. Third is saying savings increasing investment, which will somehow fluctuate the national income. But how it will fluctuate, we do not know. It might be increase, it might be decrease. Okay. And the fourth one is saying savings increase investment. It will create national income, no changes. It means national income will remain constant. So what do you think which of the following is a correct statement? What do you think which of the following is a correct? See, if one person's savings is increasing, the another person's investment will be that money. So if I'm saving my money in the bank, it doesn't matter that money will not be invested. That money will definitely be invested because each and every transaction now circulates in the economy. If I maintain a deposit in a bank, my deposit will be given as a loan to the someone else. That someone else will purchase the goods and services from the market. And in the market, you will be generating income for the particular labor or particular shopkeeper or someone. Then the shopkeeper will pay money to his or her, let's say, domestic help or something. And then that money comes to the bank because that domestic helper of that particular shopkeeper's house, he deposited or she deposited his or her money in the bank. So this is how circulations happen. And that's why if we talk about the changes, it will remain constant. Now, it will not impact the economy because it will remain constant because one's savings is another one's investment. So right answer will be D. Okay, it is true. Next. Which of the following is true for disposable income? Now, if I talk about every person, let's say, for example, if I am earning, if I am earning 1 lakh rupee in a year, so will I be capable of spending whole 1 lakh rupee? Can I spend whole 1 lakh rupee? Yes or no? So you can might be or might not be, but answer is no. I cannot spend 1 lakh rupee. Like some people will say, it depends on you. If you want to save your money, you won't be able to invest 1 lakh rupee. But no, it's not about savings. It's about liability towards the government. If you are earning a certain amount of money, you have a liability towards the government. You have to pay the taxes. So I won't be able to spend whole salary of mine. I have to go to the taxes to the government of India, because of which my expenditure capacity also varies. Because if I am paying high taxes, my expenditure capacity will be low. If I am paying low taxes, my expenditure capacity will be high. So first option is saying disposable income is the difference between private income and indirect taxes. Second, disposable income is the difference between personal income and indirect taxes. Disposable income is difference between private income and direct taxes. Fourth is saying disposable income is difference between personal income and direct taxes. So we have two terms. We have personal income. Personal income means the total income of an individual. Whatever an individual person is earning in a year, whatever an individual person earning in a year, that will be counted in a total income of a individual. That's the personal income. Now we have personal disposable income. That will be personal income minus direct taxes. So whatever my personal income is, I won't be able to spend whole amount of money. What I have to do, I have to pay direct taxes on that. I have to pay income tax. I have to pay property tax. I have to pay, let's say, for example, gift tax or whatever tax there is, liability comes to me. So personal disposable income means the income which can be spent by the public. Okay, so right answer is disposable income is the difference between the personal income and the direct taxes of a government. So right answer is your D option. Okay, so do remember, personal income means the total income of an individual, and personal disposable income means the income that can be spent by a customer on the goods and services. Now, which of the following is true? Which of the following is true? We have GNP plus depreciation equals to NNP. It can't be right. I have told you, if you want to calculate net value, the gross minus depreciation you have to do. Okay. Now you are doing what? You are calculating gross with the net value. So it's very obvious you have to plus the depreciation or not. You have to plus depreciation. No, if you want to calculate NNP, you have to subtract the depreciation. This is wrong. Now, GNP equals to GDP plus net factor income from abroad. This can be right. This can be right. Let's take this particular example, this particular option. So NDP equals to GNP minus indirect taxes. If you are minusing indirect taxes, it will not convert the domestic product and national product. Here you have national product, here you have domestic product. It won't work. NNP equals to GDP minus depreciation. If you are doing GDP minus depreciation, GDP minus depreciation will give you the NDP. It will give you what? NDP. But the option is asking about NNP. It is also wrong. So the right answer will be B. GNP equals to GDP plus net factor income from abroad. Now, what does net factor income from abroad mean? Simply the earning that you are having from the foreign country. Now, net factor income from abroad or foreign income from abroad, both are same. How to calculate? Income of Indians in foreign minus income of foreigners in India. What is net factor income from abroad? Income of Indians in foreign and income of foreigners in India will be counted here. It means simply you will be counting the money that have come to India from the foreign sources. Okay, so right answer will be your B option. GNP equals to GDP plus net factor income from abroad. Now, which of the following is not needed while considering the gross national product? When you are talking about gross national product, which of the following will not be needed? First, the net investment made by foreigners within a given period. The total private investment made within a given period, the total purchase of goods made by the government within a given period, the total per capita income of a citizen country within a given period. So you are calculating national product. National product means the production have to be done by the citizen within our geographical boundary of a country. Okay, now let me know which of the following is correct. So the net investment made by foreigners within a year? No. You are calculating a national product, not only foreigners. You want Indians. Foreigners won't work. Second, the total of private investment made within a year? No. The total purchase of goods made by the government within a year? Obviously not. The total per capita income of the citizen of a country within a given area? This is right. Because GNP means money value of all final goods and services produced within the money value of all final goods and services produced by the citizen of a country within or outside the geographical boundary of a country, that is known as GNP. Okay, so right answer will be D option. Clear? Next. The difference between gross national product and gross domestic product. So what is the difference between GDP and GNP? So we have first axis, subsidies over indirect taxes, depreciation, net foreign income from abroad, axis of indirect taxes over subsidy. So you are asking the difference between GDP and GNP. Okay. So it's very obvious now you are calculating the difference between domestic product and a national product. You are calculating a value on the domestic product and a national product. It means simply it is the difference between the income of the citizen. Like domestic product covers the income of Indians and foreigners, right? Within the boundary. The national product covers income of Indians in India and foreign. Anna, this will be national product. So what is the difference? The difference is that income of Indians in foreign and income of foreigners in India. This difference is there in the GDP and GNP. That's why right answer will be net factor income from abroad. That's why, because let's say you want to calculate GNP. You calculate GDP. GDP means the money value of all final goods and services produced by the citizen or even by the any other person of the in the country. GNP means you want the income of Indian only in India or outside, right? You both have to count. So what you can do, plus income of Indians in foreign minus income of foreigners in India. So this is known as net factor income from abroad, and this is the only difference. When you calculate the income of Indians in foreign and foreigners income in India, this difference is known as net foreign income from abroad. And this is the difference between GDP and GNP. So right answer will be C. Okay, now gross domestic product is a measure of the total value of all dash. So GDP is the measure of all the total value of what? Consumer income in an economy over a period of time. Capital accumulation in an economy over a period of time, sales in an economy over a period of time, final goods and services produced in an economy over a period of time. So which of the following is correct? So GDP is the money value of what? GDP is the money value of all final goods and services produced within the geographical boundary of a country during a financial year. So you are calculating total value of what? Final goods and services. So the right answer will be D option. Right answer is what? D option. Okay, now which of the following is the actual definition of transfer payments? Which of the following is the actual payment of transfer payments? So first, transfer payments refer to the payment made as compensation to the employees within an organization. Transfer payment refers to the payment made to workers or transferring from one job to another. Then transfer payments refer to the payment made without any exchange of goods and services or none of the above. So what do you think? What actually the definition of transfer payments? What is transfer payment? So transfer payment is simply the payment that made without any exchange of goods and services like your pension. And like your pension, you haven't exchanged anything, but still you are getting, after the job, you are getting your pension. That's a transfer payment here. So right answer will be C option. Okay. Next, what is real GDP? So GDP, you all know, GDP means the money value of all final goods and services produced within the geographical boundary of a country. When you calculate GDP at the nominal GDP, you have to calculate at the current prices. Current prices means whatever production happened within the country in this current financial year, that money value will be nominal GDP. Okay. Now, the real GDP will be also there. It will be calculated on the constant price. Constant price means you will be covering, or you will be comparing the prices of goods and services from the base year. So when you compare the prices of current financial year with the base year, that's a real GDP. And when you calculate the GDP only on current prices, that's your nominal GDP. Okay, so in the nominal, comparison is not required, but in real, the comparison will be required. So the real GDP is what? GDP at constant price. Constant price will be compared with the base year. Current price will be nominal. Okay, so right answer will be A option. Good morning everyone, welcome to the official tip channel of Officer Study 24/7. As you all know, we have a 50 days 50 classes series in which we are discussing every day the one single topic of your Indian economy, Indian financial system at 7:30 AM only on Officer Study 24/7. The same we are doing in the same channel, on the same channel at 7 AM for PPB, Principles and Practices of Banking. So do remember, Monday to Friday you have to join the session at 7 AM and 7:30 AM for PPB and IFS respectively. On Saturday you will find the weekly revision session, and on Sunday you will find the special session. So do not forget to join these session only on Offices at 24/7. And if you want to join the session, do subscribe the channel and press the bell icon so that all the upcoming sessions notification be given to you. Okay, so let's start the session. In this particular session we are going to discuss IFS particular module B chapter. So as you know, 45 units are there in module in overall your Indian economy, Indian financial system. Out of that, if I talk about 11 units were there in the module A, till 19 we have module B. So today we are going to cover the 19th unit. It means today we will be ending the unit 19. It means module B of your IFS. Okay, so before starting to the chapter, first of all, I am your mentor Amanjot Kaur for Indian economy, Indian financial system as well as for PPB. And now I want to let you know first that what actually the union budget is. As you can see, the 19th unit is about your union budget. So what actually the union budget is, let's discuss that first, and then we will discuss the questions. Okay, so the union budget, if I talk about, is also, you can call that fiscal policy. So the fiscal policy every year presented with the union budget of Government of India. Okay, so first of all, union budget earlier what used to happen, first of all, it is prepared by Ministry of Finance, it is presented by Finance Minister, it is presented on 1st Feb, that is the first working day of 1st Feb of the first working day of Feb or the 1st Feb, then at 11 AM it will be presented. This is the basics of your budget. Now how this has been started, earlier we used to have what? In India there was the general budget that used to be, introduced by Britishers. So Britishers introduced the general budget in India in 1869. So the first budget of India was introduced in the year 1869. Then this general budget was divided into two parts. The first part was rail budget that used to presented by the Ministry of Railway Minister, and the second budget was union budget that used to presented by the Finance Minister, or it used to prepared by the Ministry of Finance. Then what happened? Then again in 2017-18 it is converted into general budget. Okay, so from 2017-18 we again have merged the budget and we are presenting general budget only. And since then this general budget prepared by Ministry of Finance, presented by Finance Minister, presented on 1st February and presented at 11 AM. One day before of this budget day we present the economic survey. Economic survey is simply the survey of the economy which let you know that what is the position of your economy. That is known as economic survey, right? So here we are talking about economic survey. It is presented one day before union budget. One day before union budget. Okay. Now I have discussed what is union budget, when it will be prepared, certain points I have given to you. Now one more important thing, in our constitution they haven't used the word budget. In the article 112 they have used the term that is annual financial statement. They have introduced the term annual financial statement. So the annual financial statement is defined under our constitution in the article 112. It is the budget have not been defined in any particular term, that is the budget. Budget was also talked as the annual financial statement. Okay, and what this annual financial statement actually is, this annual financial statement is the statement of income and expenditure of Government of India. It is the income and expenditure of Government of India. And also remember, whenever Government of India presents the budget, it always gives you the estimate budget. It always gives you what? Estimate budget. Because whenever government is presenting budget, that budget will be presented for the upcoming financial year, not for the current financial year. You are estimating for the upcoming financial year. That is your budget, है ना? That's the estimated budget. Estimated budget. And in the end of the financial year, you do what? You revise this budget just to check whatever planning you have done, it was success or not. So in the end of the financial year, we do what? We revise the budget. Okay. Now apart from that, if we talk about budget, the sources of income for Government of India are of almost 4 types. First, government earn money from tax. Government earn money from non-tax services. Tax means direct tax and indirect tax, both will be covered. In non-tax, government will cover your taxes, not the taxes, fine, penalty, challan, etc. will be covered in the non-tax. Then we have a debt receipts. It means the government have given a loan to someone, to some country, and government is charging interest on that. Then we have non-debt receipts. Now non-debt receipts simply means what? It simply means you are taking back, you are doing investment. On investment, you are taking back the profits. That's the non-debt receipts. These are the sources of income for Government of India, and the expenditure for Government of India are of 2 parts, or they have divided into 2 parts. That is scheme expenditure and non-scheme expenditure. So there are certain expenditures in the country which are already planned. We have to establish schools, hospitals, dams or something else, let's say. So this is already planned. We have to give LPG connection to 1 crore BPL family in the country. This is already planned. So this is the scheme expenditure. Non-scheme expenditure which can happen suddenly, like the uncertain situation, natural calamities, etc. So that will be the part of your expenditure. Okay. So this is what the budget is. I have given you the overview. Now let's start with the questions and discuss in the form of question with the explanation. But in the end of the session, I will be asking you all how many answers you have given correct. So be very precise about your answers so that you will let me know in the end of the session how many answers you have given correct. Now fiscal deficit refers to dash. What does fiscal deficit refers to? So if I talk about deficit, deficit means loss. When the expenditure of Government of India is more than the income, this is known as deficit. So we have certain options here. The first we have the difference between government's total expenditure and its total receipts, including borrowing. Second, the difference between government's total expenditure is total receipts, excluding borrowing. Third, the difference between government's tax collection and salary payment. The difference between government's tax collection and government's borrowing. So what do you think, which of the following is the fiscal deficit? Which of the following is the fiscal deficit? Let me know which of the following is correct. A, B, C or D. Okay, so the deficit means loss, and whenever the loss happens, the expenditure of Government of India will be more than the income. That's the loss. Hana, that's the deficit. So fiscal deficit happens after the budget has been gone to the loss, when the budgetary deficit is there. What is budgetary deficit? The overall budget of the Government of India is in the loss. The overall budget means the expenditure is more than the income. That is known as your budgetary deficit. Okay, so here when we talk about fiscal deficit, it will be the difference between government's total expenditure and total receipts, and that you have to exclude the borrowing. So whatever loss happened, the total expenditure was more than the total revenue. After that, government has borrowed the money, so that will create your fiscal deficit. The right answer will be B option. Right answer is what? B option. This is fiscal deficit. Now there are 5 types of deficit in the budget. Okay, now which of the following is the definition of budget deficit, or you can call it a budgetary deficit? Budgetary deficit or budget deficit, both are same. So you have these options. First, excess total expenditure over total receipts minus interest payments and borrowings. When your total expenditure is more than your total receipts and you are subtracting the payments and borrowing. Second, excess of total expenditure over the total receipts minus borrowing. Okay. Excess of revenue expenditure over the revenue receipts. Okay. Excess of total expenditure over the total receipts. So what you're talking about, budget deficit, it means the overall budget of the government went to the loss. And when the overall budget went to the loss, it means total expenditure is more than the total income. So right answer will be D option. The excess of the total expenditure over the total receipts will be the right answer. So right answer is D. Okay. Next, revenue deficit is calculated as. Revenue deficit is calculated as. So I will tell you, you can answer here. I will give you the understanding of revenue deficit means what. Actually, budget have its 2 components. The first one is revenue budget. The revenue budget is the short-term budget of the Government of India, which talks about daily income and expenditure. Then we have second component, capital budget. Capital budget is a long-term budget which talks about the long-term income expenditure of Government of India. Now revenue receipts. Revenue budget covers your revenue receipts. It means the income that Government of India is earning on the day-to-day basis, and the revenue expenditure, that means simply your expenditure that Government of India is doing on the day-to-day basis, like the salaries or payment, whatever. Now similarly, the capital budget will have capital receipts and the capital expenditure. So when the overall budget went to the loss, when the overall budget went to the loss, you can say revenue expenditure plus capital expenditure minus revenue receipts plus capital receipts. It means both the expenditures in revenue and capital are more than the income of revenue and capital. So it is what, whenever you calculate the overall budget expenditure or income, you have to cover revenue and capital budget. Right, this is what I'm trying to say. If I'm calculating the overall expenditure of the Government of India, I will calculate capital expenditure plus revenue expenditure. I want to calculate the overall income of Government of India, I will write like revenue receipts plus capital receipts, because budget have these 2 components. Now what will be revenue deficit? The question is asking about revenue deficit. So when this revenue expenditure is more than revenue receipt, that's the revenue deficit. So right answer will be your C option. Okay, right answer will be your C option. Clear? Next. Net tax revenue. So tax revenue is simply the earning that Government of India does with the taxes. There are 2 types of taxes, direct and indirect. Why we call direct tax as a direct, or why we call indirect tax as an indirect tax? Because direct taxes are those taxes whose burden cannot be shifted. Let's say, for example, I am the customer, I am the public. So I have a liability to pay the taxes to the government, because government is providing me all the services I am using in the country. I am using road, I am using metro, I am using let's say public transport, whatever I am using, that is here because of the government. So I have a certain liability towards government. I have to pay that amount to the government in the form of taxes. And the taxes are of 2 types, direct and indirect. So direct tax is what? It's a type of tax in which you will find, what can I say? You cannot shift your liability on the third party. Let's say I'm earning a certain amount of money. I'm having my own income. So the company is deducting TDS, that is tax deducted at source, every month from my salary, and that other 24/7 pays that to the Government of India. Now I am saying to the company, do not cut my taxes from my salary, give me my whole salary. My taxes will be paid by my brother. Can I say that? No, because direct tax is the liability of you, the person who is earning the money, है ना? You cannot shift your liability, you cannot shift your burden on the another party. So direct taxes are those taxes whose burden cannot be shifted on the third party, but the indirect taxes burden can be shifted on the third party, like in the GST. Okay, so which of the following is correct in case of net tax revenue? Tax revenue we are calculating here. So whatever the gross tax revenue was minus national calamity contingent duty transfer to NCCF minus state share. So this is the right option. The first option is correct here. Kyun? Because the gross tax, whatever the gross tax revenue was there, out of that you have deducted the value which you have to pay because of the national calamity. You also have deducted the value that the share you have to send to the state government. So after deducting all the expenditure that you have done out of your gross income from the taxes, that will be your net tax revenue. Here you are adding the tax share. Why you will add the tax share? You are paying taxes to the state government. You are not taking taxes from the tax share. You are paying taxes to the state government. You are not taking taxes from the government, state governments. That's why this won't be right. Here you are adding the expenditure of national calamity. How you can add? This is your expenditure. This is your not income. Tax revenue is the income of the government. This is your expenditure. It cannot be right. The fourth one, again, it is adding the national calamity expenditure. That's why the right answer will be A option. Okay, right answer is A. Next question. Net fiscal deficit is the difference between. Now, fiscal deficit we have seen after the budget went to the laws, whatever the borrowing of the government, that will be known as fiscal deficit. So it is the difference between what? Gross fiscal deficit minus net interest payment. Gross fiscal deficit and interest payment, gross fiscal deficit and net lending, none of the above. So it's very obvious, net lending remained, you have taken the remain lending you are and talking about gross fiscal deficit. So when you subtract the net lending from the gross fiscal deficit, you will get the net value of fiscal deficit. Because we have discussed now, fiscal deficit is what? Total expenditure of government minus total income of the government excluding borrowing. So you have excluded the borrowings here. And that's why it's a difference. Clear? So right answer will be C option. Right answer is C option. Next. Total receipts in the central government budget. Receipts means the income of the government. So from where the government of India is earning income, that you have to tell here. The total receipts of the central government. So we have these four options. First, revenue receipts plus capital receipts plus fiscal deficit. It can't be true. Revenue receipts, capital receipts plus drawdown. It can be true. It can be true because you have revenue receipts, capital receipts. Revenue, capital, again deficit. Deficit is not your receipt. Total receipts means we are finding out the income of the government of India. Deficit is not an income of the government. That's why first and third will be wrong. And also the fourth one will be also wrong because it is including deficit. So the total earning of the government is revenue receipts plus the capital receipt plus the drawdown of cash balance. Whatever cash balance was there, that is also the income of government of India, right? That's why it is the right option. So right option will be your B option. Clear? Next question. Net fiscal deficit is calculated as. So that's what we have discussed till now in this particular session only. So which of the following is the correct calculation? The formula it is asking. Gross fiscal deficit plus net lending, you can't plus, you have to calculate net value. Net means remained value you have to calculate. So gross minus net lending, is it true? Yes, it is true. We have just discussed in the form of difference. The difference between the two is known as net fiscal deficit. So simply gross fiscal deficit minus net lending will be the right option. Okay, right answer will be B. Now, expand NCCD. Which of the following is the full form of NCCD? One second. Okay, this is the NCCD. First is saying National Council on Crime and Delinquency, National Council on Credit and Debentures, National Council on Commercial and Deregulation. No, no. The right answer is National Council on Crime and Delinquency. So right answer will be your A option. So a 0.5 mark question can be asked in the paper. I will tell you 0.5, 1 and 2. This is the distribution of your mark. In 0.5 you will find what? In 0.5 questions, you will find like one-liner questions. You will find, let's say, for example, abbreviations. Okay, abbreviations full form can be asked. You can find like the questions of your True, false type can be asked. है ना, one liner true or false statement was. One liner you can find fill in the blank. In 2 marker question you will find case study questions can be there. Statement based question can be there. Okay, so these are the pattern of question you can see that will be available in your paper. So accordingly the abbreviations will be also important. Whatever abbreviation you find out, do make sure you read that, है ना. So here the question is asking pick odd one out, the different one out of these 4 options. Out of these 4 options, which of the following is a different one that you have to tell? The loans to public enterprises, pension, subsidiaries, police. So you can see in the budget we talk about loan given to the public enterprises, pension, that is the expenditure of government, subsidies also the financial assistance government is providing to the social welfare of the country. Police is not a part of like a budget or union budget of the country, so the right answer will be D. This is the odd one out. This is what? This is the odd one out. Next question, again the pick the odd one out. Achha, the pick odd one out will be also your 0.5 mark question. This pattern of question can be seen in the 0.5 mark question. Okay. So now these are the 4 options you have. First, custom, service, interest or income. Which of the following is your odd one out? See, all are the form of income. Custom duty, government's income. Service tax, government's income. Income tax, government's income. Interest receipts is also a government's income, but the difference is it's a non-tax revenue. It's what? It's a non-tax revenue, and the A, B and D all are what? They are tax revenue. So the right answer will be here your C option, because it's the only option that is the income of government but from the source non-tax revenue. So that's why C option will be there. Good morning everyone, welcome to the official YouTube channel of Officer Survey 24/7. How are you all? So welcome to the channel, and as you all know we have started 50 days 50 classes in which we are discussing a particular chapter regarding your Indian economy and Indian financial system at 7:30 AM only on this channel. Apart from that, the same series is going on for all of your JAIIB subject, but the timings are different. For PPB you have to join at 7 AM and for 7:30 AM you will join the Indian economy and Indian financial system session that will go from Monday to Friday. Now what happens on Saturday and Sunday I will let you know in the end of the session. So let's start the session. Before starting the session, I am your mentor Amanjot Kaur for Indian economy, Indian financial system as well as for principles and practices of banking. So every day we are discussing a particular chapter in which we are talking about the concepts in form of MCQ. So what we are going to do today, so you can see we are going to discuss module C unit 20. It means the module A and module B have been completed. The total 45 units are there in the Indian economy, Indian financial system subject. Out of that 11 is in the module A. From 12 to 19 it is in the module B, and from module C we have 20 units. So 20 to 28 you will find the module C. After that 29 to 45 you will find in the module D. That's the biggest module of Indian economy, Indian financial system. So we have completed 2 modules. If you haven't checked those sessions, do go to the channel, go to the playlist, and you will find all the sessions from first to till now. Okay, so let's start. But before starting the session with the MCQ, we will discuss the basic understanding of the financial system, and then we will move forward to the questions. So if I talk about financial system, what actually the financial system is? So financial system is simply means the system in which funds will be exchanged. The system in which you are exchanging funds is known as financial system. Clear? So the system in which we are exchanging fund is known as what? Financial system. So if I am talking about financial system, it is the system where we do what? Where we exchange the funds among whom? Among the persons, or I can write directly here, among the persons who have surplus money and the persons who have deficit of money. To exchange the fund among the persons who have deficit of money and the persons who have surplus of money, this is known as financial system. So financial system is simply means exchange of funds among the persons who have surplus money and the persons who have deficit of money. Surplus money persons means those persons who save their money. They are not investing, they are saving their money. These are the persons who are able to give fund to the persons who need the money. And to exchange this fund, what we need a certain component. So the financial system of the country have a certain components. It have three components, sorry. It has how many components? Three components are there. First we have financial market. So financial market is the market at where you exchange the certain financial instrument to fulfill your requirement of money. So financial market is the place where you are able to raise your capital, to raise your funds. That's the financial market, okay? And there are so many financial market: money market, capital market, forex market, insurance market, etc. Now if I talk about second, that is financial instruments. Then we have financial instrument. Financial instruments are those instruments which help you to raise fund. है ना? These instruments are used in the financial market to raise your fund. First, you can have shares, bond, debentures, call money, notice money, term money, certificate of deposit, mutual fund, etc. All these are the financial instrument. है ना? By selling, purchasing them, you will be able to raise capital from the market. Now, third, we have market participants. Third, we have what? We have market participants. Now, market participants are the persons or the institutions who participate in the economy or in the financial market. Like it can be anyone. It can be you, it can be me, it can be RBI, it can be government, it can be bank, it can be NBFCs. Anyone can participate in the market. Okay. It can be primary dealers as well. So, anyone who is using the financial instrument in the financial market to raise capital or to exchange funds among the persons who have surplus money and the persons who have deficit of money, this is known as your financial system and the components of financial system. Clear? I hope it is clear. These are the three components. The detail of these components we are not discussing right now. Just overview I have given you. Now, if I talk about the types of financial institution, we have two types. We have formal financial institutions. We have informal financial institutions. So, what is the difference between these two? The types of financial institutions, we have formal and informal. Formal financial institution is an institution which helps you, which helps you to do what? It helps you to maintain a certain standard in the transactions. Formal financial system is the financial system in which regulators will be there, like RBI, SEBI, IRDA, PFRD. These are the regulatory bodies and they regulate the system that is known as formal financial system. Okay, so formal financial institution means those institutions which have the regulatory bodies. They have proper guidelines, they have a standard of working, like they have defined this is the guidelines according to you have to work. So this is known as formal financial system. The informal financial system is a type of system where there is no regulatory body, where there is no rules, regulations, where there is no certain kind of guidelines or a standard have been given to the mediators, to the participants, to the regulators. Okay, because there is no regulator, there is no one to supervise you, there is no one to monitor you. In that situation, you will find the informal financial system. Now, the examples are formal financial system have banks, NBFCs, your mutual funds are there, all the kind of development financial institutions are there, they are the formal financial institution. Informal, we have money lenders, we have relatives, we have brokers like the jamidars and etc. Land holding farmers, etc. They are the informal financial institutions because they are not regulated, they are not supervised, they do not have a standard of work. They accordingly decide what they want to charge, how much they want to charge, and what condition of collateral they want. Everything will be decided by individual person. That's the informal. So this is the certain overview of Indian financial system. I hope you get it. Now we will be starting with the questions of this particular chapter, that is Indian financial system. So in the end of the session, I will be asking you all how many answers you have given correct. So do please count what answer you are giving right. And those who are watching us recorded, do let me know after you end the class. Then what you have to do, you simply Okay, so let's continue. There was certain internet issue. I hope it's okay now. So let's continue the session. In this particular session, we have started the first question. The first question is asking which of the following is not the part of your informal financial system. So you have to answer which of the following is not a part of your informal financial system. So informal financial system means there is no regulatory body available. First is money lenders, mutual funds, relatives and Mahajan. So they are not a part of your informal financial system. So your money lenders are informal, relatives are informal, Mahajans are informal, but not the mutual fund. Mutual funds are regulated by SEBI. What is SEBI? Securities and Exchange Board of India. So mutual funds are the part of formal financial system. Okay. Now the second question, so right answer will be B option. The second question we have here, which of the following is not part of the formal financial system? Not a part of formal financial system we are talking about here. So the options we have, the first, association, banks, NBFCs, insurance companies. So which of the following is not the part of your formal financial system? The formal financial system which is regulated by the authorities like the RBI, SEBI, Adda, etc. So associations, banks, NBFCs, insurance. Insurance company regulated by Adda. Insurance Regulatory and Development Authority of India. NBFC is regulated by RBI. Acha, NBFCs incorporated under Companies Act, but they have been regulated by RBI. Banks regulated by RBI, but not the association. So associations are a part of informal financial system. So right answer will be A option. Okay. Next question is talking about which of the following are the part of the financial system. Which of the following are the part of the financial system that you have to answer here. First we have financial market, financial instrument, financial institutions and all of the above. So which of the following you have a part of financial system? A, B, C or D? So it's very obvious. I have just told you that the financial system have three components: market participant, financial instrument and the market participants. Then right answer will be all. All are the components or all are the part of financial system. So right answer will be D. Okay, next. Which was the first bank to establish in India? Achha, this question can be asked in three forms. The first form is which of the following is the first bank of India? They can ask second question, which of the following bank has introduced the formal financial system in the country? Third, they can ask in which particular year the formal financial system was launched in India. So these are the three ways to ask this question and let me know which particular bank it was. It was SBI, Punjab National Bank, Bank of Hindustan or Bank of India. So you can know obviously it can't be SBI because SBI was not the first bank. We used to have the three presidency bank, Bank of Bengal, Bank of Bombay and Bank of Madras. These used to be three presidency bank. They all been amalgamated and introduced the Imperial Bank of India. And after that, Imperial Bank of India was changed into State Bank of India. That we have already know. So it can't be SBI. It can't be PNB. PNB established in 1894. So it can't be the right answer. So Bank of India and Bank of Hindustan, one of them will be the right answer. The right answer is Bank of Hindustan. 1770, the first Bank of India which had its headquarters at Calcutta. Okay, so this is what we're talking about. The first Bank of India is Bank of Hindustan. The first formal financial institution of our country is Bank of Hindustan, or in the year 1770. So the right answer will be your C option. Okay, next we have in which phases of development of financial system was focus led on setting up development financial institution. So development financial institutions are the kind of institution which are working on the development of a particular sector. Like we have NABARD. It works for agriculture and rural development. We have SIDBI. It works for small industries. We have Exim Bank, which works for export import of the country. We have NHB, which works for the housing sector. We have IFCI, which works for the big industries in the country. We have now the latest one, NABFID, that works for the infrastructure development of the country. So these all are the development financial institution of our country and they work for the particular sector development in the country. So now let me know Which particular phase focus on the development of development financial institution? Phase 1, 2, 3 or 4? Which of the following is correct? Phase 1, 2, 3 or 4? So right answer is your phase 2, in which we have introduced the development financial institution. Okay, so right answer will be B option. Next, the financial system in India. Okay, so what we're talking about, Narasimhan Committee 2nd 1998, it gave which of the following recommendation for strengthening the financial system in our country? So we have here a lot, around 4 recommendation. Out of that you have to tell Narasimhan Committee have given which of the following recommendation. Also, one way of asking question on the same topic will be like, Narasimhan Committee have given the recommendation on which sector? So we know Narasimhan Committee has given the recommendation on the financial sector reform, but the financial sector reform was for particular which sector? It was for banking sector. So first is strengthening the banks in India, true. Narrow banking, true. Capital adequacy ratio, true. Review of banking laws, true. All these recommendation has been given by Narasimhan Committee in 1998. So the right answer will be all of the above. Right answer will be what? All of the above. I hope it's clear. The option number D will be clear. And apart from that, Narasimhan Committee also said that government of India has to, RBI has to reduce the CRR SLR rate also. Okay. So a lot of recommendation has been given by Narasimhan Committee and lot of recommendation have been accepted by the government also. Now, which of the following is correct regarding financial system? So we have a particular statement about financial system, out of which you have to tell which of the following is correct. First, the formal financial sector, on the other hand, is categorized by the presence of an organized institutional regulated system, which caters to the financial needs of the modern sphere of economy. This is true. It's true. The formal financial institution or sector is actually regulated, organized or institutional. Second, banking institutions or depository institutions. These are those which include banks and other credit unions which collect money from public against interest provided on deposit made and lend the money to the ones in need. Okay, so what we are talking about here, simply the banking institution or the depository institution we are talking about. They are the institutions which actually covers banks and financial institutions who are allowed to accept deposit from the public, and then they will use that money or deposit of the public in investment or lending purpose. So this is also true. Now the non-banking institution or non-depository institutions are those institutions which cover insurance, mutual fund, brokerage companies that fall under the category. So they cannot ask monetary deposit but sell financial products and services. That's true. Insurance company cannot accept deposit from the public. They are simply selling their insurance products. Similarly with the mutual fund. So the right answer will be all are correct. All the statement about financial system are correct. So right option will be D. So these kind of a statement question give you the insight about the topic also. That's why it's very important you read all the statements here. Now next question is asking about that the financial market has 4 major segments. Which of the following is not one of them? So they have 4 major segments. Out of these types, which of the following is not a part of financial market? And options you have: money market, foreign exchange market, capital market, insurance market, monopoly market. So you know money market is regulated by RBI. You know forex market is also regulated by RBI. Capital market regulated by SEBI. The insurance market regulated by Adda. So all these are the financial market, but not the monopoly market. Monopoly market is the market where you will find single seller in the market. So when a single seller have its monopoly in the market, that is known as monopoly market. Like he is the only seller there, whatever he or she wants in the monopoly market, that's what is going to happen in the economy, because they are the single seller or say they are the single player in the economy, and that is known as monopoly market. So this is not your one of the financial segment, financial market. So right answer is only 5. Only 5 is not the one of the financial markets. Right answer will be D option. I hope it's clear. Achha, I haven't written the option here, so right answer will be your D option. Okay, next. Next, we have the informal financial institution do not include. The informal financial institution do not include out of these 7 examples, which of the following is not a part of your informal financial institution. So, informal means no regulatory body. So, first of all, I can simply say individual money lenders could be traders, relatives, they are informal. You have to answer which of the following are not, but they are informal. Second option is saying non-banking financial institution, they are not informal. Hana, they are the formal. NBFIs are the formal. RBI regulates them. Okay, now groups of person who could be operating as association and fund, they are informal. Financial regulators are formal. Local brokers, pawn brokers was your informal. Non-banking financial enterprise like finance, investments and fund, they are informal. Development financial institutions are formal. So, 2nd, 4th and 7th are not the part of informal financial institution. It means option number D will be correct. Which option is correct? Option number D will be correct because 2nd, 4th and 7th are the formal financial institution. They have the regulatory body. So, right answer will be D. Okay. Now, read the following statement carefully and choose the incorrect one in relation to the global financial crisis. So, global financial crisis, you all have heard about it. We also discussed that to reduce or to eliminate or to reduce the impact of global financial crisis in India, the government of India and RBI has given a lot liquidity in the market. So, the question asking here first, it happened after Great Depression. Obviously, it happened after Great Depression because global financial crisis happened in 2007 and 8. Hana? Now, the global financial crisis originated in EU. No, it was originated in US. This is incorrect. Second one is incorrect. Okay, now, the financial crisis forced the solvency of many banks and financial institutions, US and the world. No, it is also incorrect. It is also what? It is also incorrect. It have already impacted the US, not only the whole world. In a nutshell, the whole financial system was frozen. This is true. Because of the global financial system, the whole financial system froze for a particular period of time. It means the incorrect option we have 2nd and 3rd. 2nd and 3rd are the incorrect option. So, right answer will be your D option. Okay. Right answer will be what? D option. Good morning everyone, welcome to the official YouTube channel of Officer Survey 24/7. So first of all, let me know how are you all and how your preparation is going on. So as we know, we have very less day remaining for your JAIIB October paper. The first paper of Indian economy, Indian financial system will be on 8th of October. So we have very less time and we have to utilize this time very precisely so that nothing is there which we will not be able to cover. So we have to cover the conceptual understanding, the topic wise practice, the full length mock test, the revision, everything we have to cover. And how we will be able to cover that? We will be able to cover that particular part of the syllabus by continuing our preparation. So do not take a gap just because you will think like at the time of exam I will take the leave and continue the studying. Don't do that. Be continue in your regular preparation. Okay, so let's start the session. A very welcome to the channel. I am your mentor Amanjot Kaur for Indian economy, Indian financial system, as well as for principles and practices of banking. So in this particular session, what we are going to do, as you know, 50 days, 50 classes we have started every day. Monday to Friday, we are discussing a particular chapter of your subject in which explanation with MCQ we are covering the understanding of the chapter. So already module A and B we have completed. It means out of 45 units, the module A covers 11 units and module B covers up to 19 units. So that we have covered already. Now we are already on the module C and module C 21st chapter or 21st unit, that is your Indian banking industry that we are going to cover today. So Indian banking industry structure is what? Simply we have to understand the evolution of Indian banking in the country and the types of bank, everything we have to cover. So you can see module C we are discussing here, and if we talk about any particular bank or any particular So in every type of bank, we have discussed here that a particular definition, a particular category of bank has been defined by RBI. So first, before coming up to the questions, we will be starting with the understanding of the topic. So when we talk about banking structure simply talks about the types of bank, the evolution of the bank, and everything you have to cover. So first of all, in the 1770 year, in the year 1770, we have seen that the establishment of Bank of Hindustan was done, and this was the first bank which was established in our country in 1770, and the headquarter of the bank was in Calcutta. Now this Bank of Hindustan is the only bank, or we can say the first bank, which has started the formal financial system in our country. Now what is formal financial system? We have discussed that already in the 20th unit. The system where the regulators are there, the guidelines are there, the rules and regulations are there, that system is known as formal financial system. So the formal financial system started in India from when? From 1770. Okay. After that, RBI, Reserve Bank of country, the central bank of our country, was established on 1st of April 1935. That's the first time we have established the central bank of our country in the year 1935, 1st of April. So when RBI was established, it used to be the private shareholders bank. It was what? It was the private shareholders bank. It means to establish Reserve Bank of India, to establish the central bank, we needed a particular capital, and that was not available with the government. The 5 crore initial capital was not available with the government, so that have been taken from the public as a shareholding, and that's why RBI used to be the private shareholder bank. But now the ownership of RBI has been changed. Now RBI is the government's bank, and in the year 1949, 1st of January, the nationalization of RBI was done. The nationalization of RBI was done. Or since then, RBI is the Government of India's bank, because Government of India have purchased 100% shares of your Reserve Bank of the country. Clear? Apart from that, if I talk about the nationalization of commercial bank, the first nationalization of commercial bank happened in 1969. Okay, in which year? In 1969, the first nationalization of commercial bank have been seen, and there was 14 commercial banks that were nationalized in the year 1969. How many commercial banks were there? 14 commercial banks were nationalized. Now, why only 14? The first Bank of India was Bank of Hindustan, which was established in the year 1770. Since then, till 1969, we only had 14 banks. No, we had unlimited banks at that time also. But why only 14 banks? Because the government have given the criteria here. Only those banks will be nationalized who have what? 50 crore public deposit. Hana? Who have 50 crore public deposit, those banks will be known as your commercial banks. Hana? Only those 14 banks were nationalized in the year 1969. Then in 1980, the second nationalization happened, and in the second nationalization, 6 more commercial banks were nationalized. Now, why only 6 more commercial banks? Because the criteria government have given, that is 200 crore public deposit. So 200 crore public deposit was the criteria that have been seen here in the 1980. Okay, so those type of bank in India was only 6. That's why the 20 banks has been nationalized till now. That is 14 in 1969 and 6 in the 1980. But if I talk about right now, we have only 11 nationalized bank. We have not more than that nationalized bank, because the other nationalized bank have been merged with the another banks. Okay, that's what we're talking about in the nationalized bank. And if I talk about the banks in India, so first of all, we have the central bank of our country, and the central bank of our country is RBI. Who is the central bank? The central bank of country is Reserve Bank of India. And RBI has divided the banks in India into 2 categories. That is first scheduled bank. Those banks who are listed in the second schedule of RBI Act 1934, these banks are scheduled bank. And the second category is non-scheduled bank. Okay. Now the scheduled bank is further divided into 3 categories. That is commercial banks, non-commercial banks, and cooperative banks. So these 3 categories has been seen. Now the commercial banks further divided into 3 categories. That we have public sector bank, private sector bank and the foreign bank. Okay, now the public sector further divided into two categories. First is State Bank of India and the second one is nationalized bank. Nationalized banks. Okay, now the cooperative banks are also divided into three categories, and the three categories are primary credit society. The three categories are primary credit society, district central cooperative bank and state cooperative bank. So these are the three cooperative bank: primary credit society, district central cooperative bank and the state cooperative bank. Now the local area banks are the only scheduled commercial bank, non-scheduled banks in the country. Only the local area banks are the non-scheduled banks in our country. LAB means local area banks. Apart from these banks, we have another category of banks also, that is regional rural banks, RRBs. We have small finance banks. We have payment banks. These are also the type of commercial bank, but they have been established for a specific purpose. That's why we define them individually, because these are public, private, foreign banks on the basis of the ownership. These are the types of commercial bank, and these are on the basis of the purpose they have been established. Like RRBs was established to uplift the rural economy. Now the small finance bank was established for what purpose? Simply to do the financial inclusion. Same reason was there for the payment banks also. Okay, so this is the all types of banks which are present in India. This is the banking structure of our country. Okay, now I hope everything, or I can maximum thing I have covered here in form of the theory, a kind of introduction of the chapter. Now let's move forward and talk about the questions, and we will discuss the rest of the chapter in form of MCQ. Okay, so first question is, the NABFID was set up as a corporate body with an authorized share capital of dash. So if I talk about the NABFID, NABFID is a development financial institution. What is a NABFID? NABFID is a development financial institution. We have NABARD, we have SIDBI, we have NHB, we have EXIM, we have IFCI, and then NABFID. So these are the development financial institution, and they work for a particular, they work for what? They work for a particular sector only. Like you can see, NABARD work for agriculture, rural development, SIDBI works for small industries, NHB work for housing sector, EXIM work for export and import, then IFCI works for industries, big industries, and NABFID works for infrastructure development. So development financial institutions are those institutions which develop the particular sector of the country. Now the first development financial institution was IFCI, and the latest development financial institution is your NABFID. So NABFID was established in the year 2021. So what was the authorized share capital that has been seen when we have established the NABFID? And also the same question I have put here was the question in the May 2023 paper also. So which of the following will be right option? 1 lakh crore, 5 lakh crore, 1.5 or 1.85. So right answer is 1 lakh crore. The 1 lakh crore was the authorized share capital of NABFID. It was established in the year 2021. Okay, do remember that this is a very important part. Google Pay is a dash. So which of the following is a Google Pay? So Google Pay used to be a what we can call it, it was a tech company that has been started providing the financial services by providing payment platforms to the customers. So it's a TechFin company, that is the Google Pay. That's a type of a TechFin company, that is Google Pay, a very famous application of a very famous payment platform we use. Now, in terms of which section of Banking Regulation Act is the business of banking defined? In which section the banking or business defined? And the sections we have in front of you, 5, 8, 10 or 6. And the Banking Regulation Act was introduced in the year 1949. Now, what is actually the business of banking? Do you let me know which of the following option is correct, and I will let you know what is the business of banking. Business of banking is accepting deposit from public. Accepting deposit from public for the purpose of lending or investment. For the purpose of lending and investment, you are accepting deposit from the public. Then the last one we have what? The last one we have, it will be repayable. Hana, it will be repayable on the demand. That is known as your business of banking. So first is accepting deposit from public for the purpose of lending or investment, and that will be repayable on the demand of the customer. Now these are the business of banking, but apart from that, various forms of business is provided by banks. Right? Banks are not only providing these services, they are providing more than these services also. So the various forms of business that the bank performs is defined under the Section 6 of the same Act, Banking Regulation Act. So apart from this business of banking, what other forms of business bank perform? Like providing demat account, insurance policy, mutual fund, etc. So these are the various types of business that banks provide, and this is defined under the Section 6. Now this definition of business of banking is defined under Section 5B of Banking Regulation Act 1949. Okay, so right answer will be A option. The Section 5B talks about the business of banking. Clear? So right answer is A. Okay, it is written B here. It's not B. The right answer is actually A. Okay, right answer is A, not B. In Section 5B it is defined. Next. What is the maximum balance that a payment bank can maintain in each account? So payment bank is what I will let you know. You let me know with what is the maximum deposit that can payment bank accept from the individual customer. So payment bank was introduced by RBI as a differentiated bank in the year 2014. In the year 2014, RBI said it is introducing a differentiated bank, and that differentiated bank got licensed in 2015. That was payment bank and a small finance bank, right? Now payment bank and a small finance bank was introduced for the financial inclusion purpose. Out of these two, payment bank was introduced on the recommendation of the Nachiket More Committee. They can accept deposit from the public, but they cannot provide loan to the customer. So if we talk about here, the maximum balance that a payment bank can maintain in each account, when the bank was introduced in 2015, it was rupees 1 lakh, but now it is what? It is rupees 2 lakhs. It's what? It is rupees 2 lakh that we will see in the payment bank accepted by the bank on per customer. Okay, 1 second. This is B. This is B. Okay, 2 lakh per customer can be accepted by payment bank now. Earlier it used to be 1 lakh, but now it is 2 lakhs. The right answer will be B option. Next question, which of the following are the feature of payment bank? So which of the following are the features of payment bank, you have to tell, and you have these 4 features, out of which you have to decide which of the following is the feature of a payment bank. So first we have, they are differentiated banks and not universal bank. Okay, this is, I have just told you that payment banks are differentiated bank, that I have told you. So this is correct. But what about universal bank? They are not universal bank. Yeah? Actually universal banks are those banks which provide all the services under a roof. When you go to the bank, deposit, withdrawal, lending, check clearance, demand draft, locker facility, safe custody, demat account, mutual fund, insurance, credit card, debit card, international credit card, debit card, everything is available under a single roof. That is the universal banking. But the payment bank cannot work as a universal banking, because payment bank cannot accept deposit from, payment bank cannot give loan to the public. So that's why they are not universal bank. So this is also true. The first statement is a feature. Okay, second, these operate on a smaller scale. It's very obvious. The payment banks are the example of narrow banking. Narrow banking means when the bank places its fund only in risk-free assets. That's what the payment bank can also do. So this is also true. It needs to have minimum paid up capital of 100 crore. This is also true. To start a payment bank, you need a 100 crore initial paid up capital. The minimum initial contribution of the promoter of the payment bank to the paid up equity capital is required to be at least 40% for the first 5 years from you have commenced your business. So this is also true. The promoter contribution in the initial 5 years will be 40% only. It means all are the features. It means all are the features of the payment bank. Okay, all are correct. Right answer will be D option. So right answer is what? D option. Clear? Next. Next we have here, which of the following are not product of NPCI? Which of the following are not the products of NPCI? Now what is NPCI? I will let you know. NPCI is National Payment Corporation of India. That's a umbrella organization for our country because it maintains all the retail payment system in our country. It maintains all the retail payment system in our country. That's the NPCI. So NPCI is an umbrella organization. And RBI have thought and RBI have said that like NPCI first of all established in 2008 by RBI Indian Banks Association. And before some time RBI said that NPCI have the monopoly in the market because all the retail payments are managed by NPCI. So it kind of actually have a what? It kind of actually have a monopoly in the market. And to remove that monopoly and to stop that monopoly from the market, RBI has introduced the new umbrella entity. They have not been established yet, but the licensing or the application, I can say, the application RBI started getting from the new umbrella entity. So these new umbrella entity will be the competition of the NPCI so that NPCI will not create the monopoly in the country. That's the RBI's idea. Now, which of the following is not a product of NPCI? Rupee is a product, IMPS is a product, NACH is a product, NFS is a product, but not NEFT, RTGS. They are managed by RBI and they both have become 24/7 also. So all are the product of NPCI except fifth. So this is not a product of NPCI, all the others are. So right answer will be D option. Okay, next. In terms of which section of Banking Regulation Act is the business of banking defined? So this we have done already. Now this is a repeated question. Really sorry. Now a transaction carried out at an ATM of the card issuing bank is called an dash transaction. See, there are two types of transaction. First is on us. Second is of us. On us transaction means, let's say you have a account in SBI. And you have a ATM of SBI. So when you have account of SBI and you are using the ATM of SBI only enough to withdraw the money, that is known as on us transaction. That's a on us transaction. But if you have a account of SBI but you are using Punjab National Bank's ATM to withdraw the money, that is known as off us transaction. So on us and off us transaction are there. On us means you are taking the money, withdrawing the money from the same bank accounts, from the same bank's ATM, and in the office you are taking withdrawal from the different bank's ATM. So which of the following will be correct? The transaction carried out at an ATM of the card issuing bank only, the card issued by SBI and you are using the SBI ATM. That's what? That's an on us transaction. Okay, so right answer is A. Right answer is what? A. Next question. Match the following. So we have institute here, we have the establishment of the institute, and we have to match them. So first let's see, out of these five, which bank establishment you know? So I know the establishment of Imperial Bank of India. Imperial Bank of India was established in the year 1921, that is fifth. Because after the merger of all the Presidency Bank, we have created Imperial Bank of India. So I remember the year. Now, do I know the Punjab National Bank? Yes, I do. Punjab National Bank was established in 1894. Okay, it stayed in the Pakistan also after the independence for 1 year. Next, the first Presidency Bank, I even know this. The first Presidency Bank was the Bank of Calcutta, but its name was changed in the 1809. That was Bank of Bengal. So it was actually established in 1806, Bank of Calcutta. So this is third. Now, I do not know the establishment of Indian Bank. I really do not know the establishment of Indian Bank, but I know the establishment of Bank of Madras. It was established in 1843. That's the fourth. So the one more Presidency Bank was there. The first Presidency was Bank of Bengal. The second was Bank of Bombay. It was established in 1840. And the third was Bank of Madras, established in 1843. It means then the Indian Bank was the 1907. So I really didn't know the establishment of Indian Bank. Now do remember, Indian Bank was established in 1907. So the first is E, the second is D, the third is C, the fourth is B, and the fifth one is A. So first is E. No. First is E, this is true. Second is D, this is true. Third is C, this is true. Fourth is B, this is true. And fifth is A, this is also true. It means the right answer will be D option. The right answer is D option. So do make sure in the match the following, find out the option which you actually know. And what are the remaining, that will automatically be fit in the answer. So right answer is D option about the match the following. Okay, now. Next is, what is the minimum capital requirement for setting up of a small finance bank? If you want to set up a small finance bank, what initial capital you required? So I have told you 100 crore is required for the payment banks, right? Now if I talk about 500 crore, this is required for what? This is required for commercial banks or universal bank. Okay, and this 200 crore is required for a small finance bank. So when the small finance bank was introduced now with the payment bank, it used to have the initial capital 100 crore like the payment bank have right now. But its initial capital has been increased by RBI, now it is 200 crore. So payment bank 100 crore, small finance bank 200 crore, commercial bank or universal bank 500 crore. So do remember all these three. Okay, so right answer will be your B option. So this is how we have discussed about the Indian banking structure in your Indian economy, Indian financial systems chapter. Now this is not sufficient, we know. So what we have to do, we have to go to the Mahapack 2.0. And to check the Mahapack 2.0, you have to download the Adda 24/7 application first. After downloading the application, just go to the home page of the application. You will find JAIIB, CIB there. Click on the JAIIB, CIB. Then go to the JAIIB October 2023. You will find all the batches here. Okay, if you want to go with the individual batch, this is the batch. If you want to go with the Mahapack, this is the Mahapack. Mahapack right now have double validity plus 81% discount. And to enroll, first of all, check the offerings of the product and then check the validity what you want. 6 plus 6, 12 plus 12 or 3 months. Accordingly, the prices will differ. Okay, let's say you want a 3 month of whatever you want. Just go click on the particular buy now option. Apply a code. The code that you have to apply is your Moon80. Okay, it will give you 80% discount, but for 1% additional discount you can use the coins that is available on application. So this will be more deducted, 1% more deducted. So this is how you can enroll in the Mahapack. Do remember the code right now is Moon80, and if you face any kind of issue at the time of enrollment, call on this number, they will solve your query. Okay, so this is how you can enroll, but first do download the application because it gives you the 1% additional discount. Okay, apart from that, Monday to Friday at 7 a.m. we are coming for PPB, and 7:30 a.m. I am coming for your Indian economy, Indian financial system, Monday to Friday. On Saturday we have weekly revision sessions, and on Sunday we have special sessions. So to attend all those sessions, you have to subscribe the channel Officers Adda 24/7. Also press the bell icon so that all the upcoming sessions notification will be given to you also. Okay, so do not forget to subscribe the channel and press the bell icon so that all the upcoming sessions notification is there. Do let me know in the comment section, drop a message there how many answers you have given correct about the Indian banking structure also. And if you are a new person to the channel, go to the playlist from 1st to 20th unit. All the sessions are available on